Hey, I'm James Nicholson, and this video I'm going to talk about what's happening with mortgages today. You see, in the last few weeks, it's been chaos in the mortgage market. We've had a lot of products removed, but is that still the case? So what's happening right now in the mortgage market? Now, before we jump into that, I want to invite you to join me on a journey. So I'm actually building my investment portfolio. You can check out all the videos on the channel and see all the good, the bad, and the ugly about property investing. Now, not only that, I'm building a portfolio for my two daughters. Georgia is 21. We've got two deals so far this year. A house in Doncaster we bought at auction, a flat in Dorking that goes with another property in the same block that we've got, and we're building a portfolio for my little baby Amelie. So take that finger of power, spin it round, smash that subscribe button over there. Go on guys, do it now. Smash the subscribe button, hit the bell notification, because you just don't want to miss all the new content that we're making each and every day. So look, we've done a few videos on this recently. They've been very popular. We've had record views on the channel, so thank you to everyone that's been joining that, commenting on that with your wonderful opinions. And so what's happened is mortgages got pulled. So I'm sure you've heard that the new Prime Minister did a mini budget. And part of the mini budget was that we're going to remove or reduce the tax on higher rate earners. Now, the markets absolutely hated that. And they were also going to do a ton of other things here that it just didn't sit well with the markets. And so the pound plummeted off the back of that. Now, the Bank of England stepped in and they said, we will do whatever we can to keep the pound strong, including raising rates to whatever is needed. And on that day, interest rates were predicted to go 2% higher at the next meeting in November 2022. They were also predicting that rates were going to hit 6%. The base rate was going to hit 6% by 2023, which means you would be paying around 9% to 10% for a deal. So that obviously panicked a lot of people. And lots of people went to get mortgages, and mortgage providers just could not cope. They could not cope with the amount of business. And so they also couldn't cope with the uncertainty. They needed to know if they were going to be putting products out that the Bank of England wasn't just going to raise the interest rates in the next few days. We've just had an interest rate rise to 2.25%, but they need to be certain that next week, while they're processing mortgages, it isn't going to go up to 4.25%. So now they've got a bit more certainty. The Bank of England and the government have actually been communicating a little bit more, which is good. Mortgages have now come back to the market. And so it was very glaring. All the big names pulled their products. NatWest, The Mortgage Works, Halifax, and all of these types of people. So I want to quickly give you some rates that they put on the market so you can have a little think about this. And if you were borrowing £100,000 and if you were paying it back as an interest-only mortgage. So TSB, they have a rate of 4.39%, which is pretty good. Product fees of £1,000. So 4.39% is what TSB are offering at the moment. So what I'm suggesting, which a lot of people agree with, some of you don't, but I would suggest if you're in a deal at the moment that you get a good deal now and fix it for 5 years, just to give you that certainty. And you can know that if you can afford that at a 5-year rate, then that's just going to tick one of those bills off that you know everything will be good. Because if you wait and it goes up to 10%, these are going to be a lot more. So TSB's got that. Now, if you've got a good EPC rating of an A or B, most people don't, you can get a deal with NatWest at 5.19%. What else is out there? So this is more realistic. This is a more realistic rate and a company that a lot of people use. And that is The Mortgage Works. I think they're part of Halifax. Not sure. You can Google that and tell me in the comments. So The Mortgage Works is someone that I've borrowed like more than £1 million off over the years on various different projects. And so The Mortgage Works would charge you 5.29% on £100,000 borrowed on a repayment only basis, which is £642. Let's see if we can find a Halifax rate on here, or are they just too all too high. Virgin Money, I'm doing a remortgage with Virgin Money at the moment. So Virgin Money, 100 grand, 5.5%, £654, which is more than people are paying now. I've got a 100 grand mortgage on a repayment, and it's 500 odd quid at the moment. So it's going to be a bit of a jump. So I can't find Halifax on there. So maybe they're not on Money Supermarket. I'm checking, but let's have a look at interest only rates. So if you're a buy to let landlord. So if you borrow 100 grand on an interest only basis, TSB are going to give you a rate, same rate, 4.39%. The payments on that would be £366 per month. NatWest are charging considerably more. So if you went with NatWest, you'll be paying £437 a month at 5.25%. I'm not going to keep going through rates. You get the message, right? Deals are back in the market, and that's because we can say with more certainty now that we're probably not going to have another interest rate rise until the next Bank of England meeting in November. I think it's November the 23rd. And so that is what the market was looking for. And so we talked in recent videos about, is the bank going to increase the rates? Yes, in that November meeting, they will very, very likely increase those rates for sure. I don't think that there's any way that they can't, with inflation still running rampant and all the uncertainty that we still have. Although it's more certain, it's still uncertain, if that makes sense, right? And so they will be raising rates. I'm pretty confident in the November meeting. So what can you do as a property investor? Well, you can get rates fixed today, right? And so I'm going to be doing some new deals. You can start the application process today and try and get that rate fixed in before they go up in November. You don't actually have to complete on that. I've got a Virgin Money deal that I'm doing now that the application started around 15 weeks ago. It's crazy. 15 weeks ago we started that process. We haven't completed, but I think in that time we've had 2 interest rate rises, if not 3, and we are keeping the rate that we applied at. So get your applications in, at least on any refinances or new deals. Start doing them now. Now, markets are cooling, and so prices are cooling for sure. There are people that have chains that are falling apart. I spoke to a good mate yesterday who is a piano tuner, and he's looking to buy a house at the moment. Other people in his chain are falling apart. And so there will be people in that situation that will take maybe a better offer because they're trying to move into their dream house. And if you can keep that transaction going, then that is a good thing, right? And that really, really helps them. So do consider that sort of stuff. Anyway, that's an update on mortgages. They're back, which is good. The rates are higher. That's not so good, but it is what it is. The rates are still not horrendous. They're going to get worse. So fix some deals today. Let me know your opinions on that. What do you think is going to happen in the market? Do comment below. Do like this video, guys. That really helps with YouTube. And do check out all the other content on this channel if you want to see the deals that I've done with my daughter, Georgia. Check them out. They're all videoed on this channel. We've got when we bought from auction. We've got tours of the property, of the renovation, and the after as well. So do check those out and check out this video right here. Thanks for watching, guys. See you soon.